mortgage is one of the most stressful products that you can buy in your life. Buying a house is probably the biggest investment you're going to make in your life. The process is quite stressful. You have the legal process, you have the mortgage applications, you have the movings. If you have to sell your previous properties, that's also part of the deal. And so you want to see something, you want to see someone, you want to speak to someone during the process. You want to be reassured that, you have submitted the right paperwork, that everything is on time, because it's a high stress process.
It's time for CX education. Welcome to the podcast for enterprise CX professionals, the people who want to connect with customers on their own terms, before, during, and after a purchase is made. In each episode, you'll learn how to create experiences your customers love. Ready? Here we go.
Hello and welcome to a new episode of CX Education, a podcast brought to you by Cinch, the Customer Communication Cloud. Today, my guest is Cyril Coste. Cyril is a digital expert and a thought leader specialized in digital transformation. Cyril has a vast cross-sector experience in digital transformation, product development, digital innovation, customer experience, e-commerce, and more. The list goes on, I think. Cyril has worked with many companies throughout his career, from French retailer Carrefour to Ted Baker, many banks like Barclays, HSBCs, and companies like Rolls-Royce, Nivea, BP, to name just a few, I guess. So I guess we're here with like a true digital transformation expert. I'm very happy to have you on the podcast today, Cyril. Welcome.
Thank you very much, Gwen. I'm very happy to be here, and thank you for this very nice introduction.
You're welcome.
I think deserve it.
Yeah, your experience speaks for itself. So I'm very excited to talk about digital transformation today because that's your expertise and especially interested in hearing how you've been working with banks and financial services. So maybe we should start by trying to define what is digital transformation and what we mean by that, or what you mean by that.
Yeah, we could spend hours talking about it and probably don't agree on one definition. Okay, so it's been, I think the first time I heard this terminology was like around 2007, 2008, just before the financial crisis, and it was called digital business transformation. So it was really how to leverage digital technologies to transform your business transformation. After around 2012, this is really where it started to crystallize into something unique and started to differ from business transformation. And this is where, in my view, digital transformation is the leveraging of digital technologies to improve customer experience and business operations. So we have several aspects for that. So the experience, touch points, channels. We have business operations, so we are talking about data, we are talking about integrations with suppliers, partners, platforms, and we are talking about change management, continuous change management, which often implies agile technologies somewhere in the landscape. And what is unique with digital transformation compared to the old-fashioned way of change management or business transformation is that it's a never-ending process. You never end a digital transformation. Why? Because you always have new channels coming in. You never have new type of customer experience coming in. New technologies are coming in all the time. So there is always something on the map that's going to change and that you need to adjust. Doesn't mean you revolutionize. It doesn't mean you clean the table. But say, okay, what does it mean for us? A very good example is, what does ChatGPT change for companies right now? That in the past few months. So, okay, what does it mean? What does the change in social landscape, with Twitter becoming paid verification or not, with poor moderations right now? What does it mean for companies who want to advertise on Twitter? So, there is always something in the digital landscape that need your attention, and you will need to adjust your digital roadmap. So
yeah, that's very interesting because I guess we think a lot about digital transformation for maybe legacy businesses or like on-prem or like that need to kind of transform to become more digital. But the reality is that even for digitally born companies, right, like it's also still an ongoing process because it's, like you said, it's never finished. There's always something new that comes in. And I guess the pace of innovation is accelerating maybe from a digital perspective. So there's always something that companies have to look into. So what do you feel that it means, especially for bank? Because I guess a lot of the banks are not digitally born, right? Like I guess they were there before the whole transformation started. So what does it mean for them, and why is it so important for banks to kind of transform, right, and embrace new ways to do things digitally?
Okay, so banking is really one, maybe with retail, where things have been a bit weird because you had the legacy players. So think Walmart, Tesco, Carrefour in retail, and think Bank of America, Barclays, and BNP Paribas in France. Legacy player, been there a very long time, and suddenly you have newcomers, heavily focused on customer experience, don't have their legacy systems, don't have huge organizations that move slowly, so their agility is in their DNA, and they are cool in the way they communicate, and they are approachable and engaging in a way that legacy players are not. So that's the kind of high level overview. Now, what does it mean? In banking especially, you can see customers see only 10% of the systems. You and I, we engage with an app and with the website, and that's pretty much it. But that's nothing compared to what is behind in terms of fraud and security systems, in terms of money management, securitization, mortgage, etc., etc. What we see, what the customers see, is nothing in terms of digital transformation of the banking process. So their bank may have invested billions of dollars in transforming, but they don't see anything in the front. And one of the reasons is the average age of IT applications, of IT infrastructure in banking. So roughly the industry with the oldest average IT applications is insurance with 18 years, and banking is number 2 with an average of 14 years. To give you an idea, retail is at 4.5 years, and a neo bank, so a new competitor to our legacy banks, has an average of 3 years. Their applications is in average 3 years. So you can see that basically we are not really talking about the same thing. It's like someone driving a Tesla and someone driving a older petrol car from the 70s sometimes.
So it's kind of becoming a true competitive advantage for all those new banks, and like legacy banks have to kind of try to catch up if they want to keep their customers, right? Because at the end of the day, if the customer experience hasn't changed and customers are demanding that, right? Like they're demanding a more digital engagement and relationship with their bank. I mean, I recently just moved to the US, right? And I opted for like a bank that is fully online. I've never set foot in any like, physical bank. Well, like, and I guess that really changed the journey, right? Like that really changed the approach. So it's becoming a true need for banks to evolve if they want to compete for their customers, right?
Well, we're not going to deep dive on the US market because you have like 16,000 financial institutions, credit unions, banks, extra regional banks. The US market is so fragmented, is so different from what we have in Europe and the rest of the world. But you're right. Probably it was a great idea from a fees perspective to choose a digital bank, because in the US, the fees as a consumer used to live in the US compared to what we pay in Europe for banking transfer, for example, it's ridiculous. But just to go back to your point, the experience is going to be great, but the banks are not going to make money. All these neo banks are struggling to be profitable. Why? Because the most profitable products for retail banking are mainly mortgages and investments such as pension plan, etc. And they have a challenge to attract customers and consumers on their platform for these products. Why? Because mortgage is one of the most stressful products that you can buy in your life. Buying a house is probably the biggest investment you're going to make in your life. The process is quite stressful. You have the legal process, you have the mortgage applications, you have the movings. If you have to sell your previous properties, that's also part of the deal. And so you want to see something, you want to see someone, you want to speak to someone during the process. You want to be reassured that you have submitted the right paperwork, that everything is on time, because it's a high stress process. Mm-hmm. Same for your pension. It's about reinsuring you about your future, etc. So the communication, you want to talk with someone. You don't want just to push buttons on an app and they say, well, this is how much you're going to get per month when you're going to retire. And these products which generate the most fees for the bank are difficult. Very few neobanks are successful in this area. After you have different actors who have focused on, for example, international transactions, because that was also an area where banks were made a lot of money by basically doing nothing. Yeah, you're French living abroad, so you know what I'm talking about.
Yes.
Sometimes also a big name, especially let's say you are a small business owner, you want to have the reinsurance of a big name, a big bank, just for your banking in case something goes wrong or whatever. I'm not going to name a bank in the UK, but we have a tendency to be very slow to refund money when there is fraud with your card. So you don't really want to bank with this type of actors. So this is part of the experience. This is what we talked about earlier.
Right.
And
yeah, so I guess the digital transformation that the banks need to continuously do is really like a I don't know if we can say a battle against the competition and having this kind of competitive advantage, but also fighting for a better customer experience because customers have way more choices than before, right? With all of those neobanks, they can, I guess, like in the old days, you would just go to the closest bank to where you live kind of approach, right? In a way. Well, like now the choices are very different. And so the customer experience and the experience you have with the bank, it became a lot more important than it was before. Would you agree with that they really need to deliver on that part because people can switch?
Yes. Firstly, it's very easy to switch now,
Yep.
especially in Europe. We have regulators have forced basically the switch where you can switch all your direct debits extra automatically. So an advantage that I'm going to give you an example about a concrete project I worked a few years ago, which was digital mortgages, and something you would not expect to be a problem, which is if I change the address of my mortgage. Okay, I decide to move somewhere, rent my home, and I want to change the address of my mortgage as a customer. You will say, okay, you call your bank and they change your address. Okay, but is that going to change the address of your current bank accounts, of your savings accounts, of your pension, of your other mortgages, or only on this mortgage? And so if you start changing the address also on the financial products, then a fraudster could say, okay, I can basically change someone's mortgage address, collect their mail, get some details about their accounts, and basically after, move the money, move their investment somewhere else. And when you work in the legacy banks, it took me months to try to retrieve the exact process about, how you can change safely an address online, because no one had the documentation. Over decades of changes in IT systems, over multiple IT outsourcing companies, the knowledge has been lost and no one knew.
Right.
It's a bit scaring sometimes. So basically, it took me a few months to basically be able to recreate this journey, to be able to allow customers to change safely their mortgage address online. It seems so simple, but it's so complex. And if you wonder why it takes always 14 days to do this, it's for your security. It's not because it's a slow process, okay? Yeah, we could do this like this. But we want to send you a text message, we want to send you an email, and we want to send you a mail, just to be sure that you are really the person who requested this change. And if someone made this change for you in order to defraud you, and most of the time it's people close to the family or family members themselves. Don't forget that. Right. So that basically you can react and you have the time to reverse the change. So
yeah, that's very interesting, right? Because I guess like if you've changed an address somewhere and it's related to one of the financial products, it doesn't mean that it will change on all the others, because within the bank, I guess it's different teams in charge and there's siloed, and like there's not the one vision of the customer journey just for your address, which seems pretty, like you said, a pretty simple thing to do. What's really interesting in what you mentioned is the fraud and security aspect, and how the need to have multi-channels to validate that and to ensure that it's secure is very important, right? Because you don't know if it's going to be the same person who received the text and the email, and like how you coordinate that, right? So I'm definitely interested to hear about like the communication channel side of it, on like the importance of that multi-channel to ensure security.
Mm-hmm.
So so what would you say is like the biggest challenge for bank? Is it the silos between the different departments, or is it like the system they use that are not like up to date, or what do you see are the biggest challenge to kind of succeed in this transformation?
Well, it's everything you just said.
Right.
So let's start with the last point. IT legacy systems. Okay. Banks have enough money to replace them. Okay. The problem is, do they want to spend this money right now to change the systems? That will probably take 5-6 years. And by the time the project is delivered, something has changed. And now the brand new system is outdated. So it's not really an agile way to see the world. And, in a sense, if it's not broken, don't fix it. Let's say if really there is no need to change it from a regulatory perspective, or, from a cybersecurity perspective, say maybe it's better to keep it and try to, make the most of what we can do with it. That's more or less the philosophy that I've seen all the time in different banks and projects. It's like, if it's not broken, let's keep it. Especially, once again, in mortgages, because the results of the new systems will need to match exactly the results from the old system at the cents. Let's say all your calculations, everything need to be exactly the same. So, of course, you don't want to do that. So you are not going to move your old mortgages to your new system, which means that basically new mortgages, if I take the UK example, can last for 35 years, which means that basically you will have two systems that you will have to maintain for 35 years in parallel. Do you want to do that? No, you don't want to do that. That's not the best way to manage your money. Okay, so that's a false economy. To go back to your previous question, it was about technology. Try to remember exactly what it was.
Yep.
And
I guess it's like trying to see what are the biggest challenge for banks, and like how should they tackle it? Because like you said, if it's that's not what you just described with this two system acting in parallel, is not sustainable, right? Like, so for them it's a big change, and I guess technology can help, but it's not just, the technology won't fix everything by itself, right?
Yeah. So there was the financialbrand.com, a very interesting publication about banking. So they made some research, and the neobanks, in average, they release a new feature or update a new feature every 2 to 4 weeks. Legacy banks is every 4 to 6 months. Okay, so
Months. Okay.
month.
Yeah.
Okay,
Yeah.
and one has far more resources than the other one, but they are far slower. Why? So you have multiple reasons. One is the organization silos, of the company. When you are a huge bank with tens of thousands of employees and everything is like a business inside another business, and communication is slow. You need to have so many level of agreements from change management, from IT, from legal, fraud, compliance. And believe me, I chased so many of this project. It takes ages. It takes a lot of time. It takes a lot of meeting to get everybody to agree. That's one of the reasons it moves slowly. Legacy systems are not the main reason because they have so many resources in terms of development in-house and outside that basically it's never a problem. And they have also the financial resources anyway to always get things done. It's really internally, and especially when you have a weak sponsorship on some specific program, so that allows some kind of competition between some, senior leaders in the organization and, I slowed down your project and blah, blah, blah. So banking is a very competitive domain where that attracts very talented but competitive type of people. Sometimes the customer is maybe not at the front of their mind. So
That's Yeah, that's so interesting because I guess we're here to talk about customer experience, right? That's what this podcast is about. On like, how can we improve customer experience using technology, and how it's important for banks to kind of understand that the needs and expectation of customers have changed, right? Like, because they have the choice, they can switch bank, they expect to kind of be able to communicate with their banks in a way that they didn't expect before, right? Like, I guess older generation would just go and walk to the bank, right? Like, now we expect to communicate with banks, like you said, on the phone and text with them and have like two ways conversation with our bank, and we expect it to be secure, and like we are very familiar now with like receiving a text message with a code to kind of like log in into some place. So I think all of that kind of experience between the bank and the customers from a customer side is almost a given, and yet not all the banks are able to deliver it in a very in a good way, right? They're not all able to deliver on that unified experience.
It's interesting that you mentioned the switch, but it's like for mobile phone switch, this doesn't really happen. Or think about car insurance. Few people switch. Why? Because I think it's a human behavior that basically we don't like. We are comfortable, and it's a pain. If the cost of the pain to switch is lower than the increase of the cost, then basically we don't do it. So it's really, we really need to have a big change in order to switch and do this commitment. And especially switching bank accounts, you have to basically change with your employer, change for all your direct debits. It's not just a simple switch. It's like you have to check that a lot of connected direct debits, transfer extra are also commission. You mentioned fraud, and I have a very good friend who is work as a head of UX in security for a bank, and he told me once. He said, we think that the person, the customer, the victim of a fraud is 50, 60, 80 years old. This is what we have in mind. No, the average was like around 25 years old. The average age victim fraud for online banking were around 25, 28. And one of the reasons was social media, of course, and also a lot of false promises with asking for money, bank transfer, extra. So the younger generation maybe don't have the same reflex to protect their bank account as maybe older people. So that's fascinating aspect that the younger you are, the more likely you are to become a victim of fraud.
Interesting. And I guess we definitely see, the communication channels, of like the solution that we offer at Cinch, playing a big part in fraud, in fraud, in trying to prevention. I was trying to find the right, in fraud prevention, in a way, because obviously, like you mentioned before, you want to make sure that the person is the right person. You will send a text, you will send an email, you will like try to communicate in different ways to validate the identity of the person. At the same time, there's still, I guess, some stigma when you receive a text from your bank, making sure that the text is from your bank, right? Like, I guess that there is like also that prevention of that. Maybe we're not always sure, right? Like, and it matters a lot more when it comes from a bank rather than it come from Carrefour or like your retailer, because the promotion, well, it's a promotion, but from your bank, it needs to be way more secured and professional, and it helps. I mean, it's important for banks to kind of deliver on that, I guess, to be at the forefront and making sure that they engage the audience in a very secure way.
Yes, I mean, this is probably the first reason we choose a bank is my money safe, which should be okay for any large bank. After is, as you mentioned, is the increased security going to add frictions on my customer journey? And how I'm going to manage it? So as I explained earlier, with the digital mortgage, sometimes it's necessary to have frictions so that basically if someone really wants to commit fraud, you have the ability to catch him before. So that's a good thing. But for every single transactions, £5 at Tesco, we can't send you a text or add something to generate a friction, because at the end it becomes obstructive and it may be counterproductive after, is that you don't even care about the message, if it's yes or if it's no, say, get them, and you enter a code and you validate the transactions made by someone else. So it's not just the authentication of the transaction via text or whatever other process. It's also the context around it. Let's say, is the customer aware of these transactions? Yes or no? It's not just to approve it, because, if you have any modern phones, between login on some corporate website, accounting software, whatever, you're going to have a ton of, do you approve? Yes. And the risk is that the context is lost and the customer doesn't pay attention to it anymore. So that's one aspect. The second aspect, the uncertainty of some channels. And we can, for example, take about the metaverse and Web3. Say, how am I going to authenticate you if you want to make transactions in the metaverse or Web3? How do I educate you about how to make safely the transactions? As far as I know, there is no banking standards for transactions in the metaverse, for example. So that's an open gate for fraudsters, with a mix of crypto stuff, extra. That's why youngsters also usually are more victim of fraud via crypto scheme. And these channels that are not really well defined or regulated and even managed by the banks, how many resources can you put for someone to scrutinize the metaverse or to run a branch in the metaverse? So that's also a risk for future transactions. And it's where, the communications outside, so as we say, text, email, notification apps, voice messages, whatever else, have an important role to play in this case.
Yeah, definitely. I think that's a really strong use case. I mean, I think that's definitely one of the biggest, I guess, use case for banks in general, using some of those communication channels and things that we don't maybe think about as much. But would you say that like legacy banks, I mean, based on some of the product you work with like HSBC or Barclays or some of the French bank you mentioned, Société Générale, like they are aware of the needs to kind of transform faster in the purpose of increasing customer experience, or it's mostly like the need to upgrade legacy systems, or what's the kind of, I guess there's no usual kind of project you work on, but you would say that there are some themes that comes back and that feel like the biggest challenge for those banks?
The bigger you are, the more challenging it's going to be to transform fast. Fast is not a word that exists in these banks because for all the reasons we talked about earlier, the change management process in a siloed organizations is never something that happens fast. So, and it's not a bad thing. I would say, legacy systems will be upgraded and updated, over time. What is important is, can you access the data in these systems? So what you must think is API microservices. It's not really system or data. It's API microservices. Can I build new services for my customers via this API and microservices? Yes, great. No, I have a problem. But this is the way to do it. It's very clear, and they all do it. Is API and microservices to access the different layers of information in the system.
Right.
The second point to your question, I should take notes when you ask questions because, which was, you mentioned fast. I would say, they have a huge customer base, these banks. So for them, moving fast is more challenging because they have a very diverse source of customers, from all ages, not focusing on a specific generation, for example. So we have a small business owner, small business, large corporation. So anything cannot be fast because you have so many parts of the organizations to align at the same time that it's naturally slow. What they need, and this is where they can seriously improve, is agility. And this is, I think it's coming. I think there's still a generational gap here between people still thinking waterfall and people thinking agile in banks. But, as people retired extra, the agility, sometimes, unfortunately, you just have to wait. You can't force things, when some concepts are not there. Slowly, basically, it's coming at every layer of the organization. And I've seen that, even in the oil and gas industry, it was exactly the same challenge. You have this generational gap between agility and...
And I guess I'm curious, like when you go in as a consultant within banks and kind of help on a specific project, like is most of the time the needs and the expectation or the driver of the project will come from IT departments trying to upgrade the system and become more modern or like more digital, or would it come from like a business needs or like from a specific like part of the business trying to evolve on the customer experience that results in an IT change or a change of like digital solution or like tools or infrastructure that they use? What's the usual use case, right? Like who's the enabler or the first kind of start of the project? Where does that usually come from?
Yeah, that's a very good question. Yeah, IT in the banking system it's really strange. I don't think maybe in the oil and gas industry you can compare it a bit. It has been outsourced. Many companies are in charge of IT system in the bank. I'm talking about legacy players. I'm not talking about neobanks here. Which means that, as we specialize in one system of one portfolio of product of the bank, and they are here to run the operations and make it safe and secure. They are not really there to provide new ideas or, to improve the customer experience. It's not part of the scope of the project. They have a 10, 15 years contract with the bank to maintain the systems and extra. So IT systems in the bank is very much on the inside side, at the architectural level, cybersecurity, bringing agility also, API microservices, as I mentioned earlier. But they are usually, it's not that they don't want to improve the customer experience. It's just that it's not their core responsibility. Mm-hmm. They are still very far. When you manage a database, a system, you are very far from the customer. You have so many layers, between you and the customers. So usually it's a product owner. So what I would call products like current accounts, savings accounts, mortgages, etc. So these are the ones who push to improve the customer experience. And now you understand the challenge is that if someone, product owner wants to improve the customer experience for his portfolio on the app or the website, how does it look like compared to the rest of the product? So that's why it's very difficult to align every time, the experience. If you want to change, let's go back to this update your address form. It must change to every single form that will request you to enter your address on the website. So these are part of the challenges after. And so this is where you need to have a really agile approach based, with some key product owners. Some will be in charge of loyalty, some will be in charge of managing address and communications, etc. And these are the ones after that will push, improvement for the customer experience. At the top, I would say, in the banking sector, it's usually the CMO who is in charge of sponsoring the customer experience. And I think almost all the banks now have a chief digital officer, who is also someone who will be extremely very close to the customer experience and responsible for the not just the channels, but the data and security aspect of the applications.
Right. Yeah, and so I guess it's always like a committee of people for sure that kind of take those big decisions because it cannot. Well, it touches so many different aspects, right? Like when you buy some of that technology or when you want to transform things, like you mentioned before, it's all about the change management as well, and it's not just about the technology. It needs to go hand in hand, but obviously finding the right technology provider to help you is one of the aspect, but is definitely not the only one. That's very interesting, and I guess it's really fascinating in a way how banks are still managing to transform, because of course we've talked a lot about like the challenge that comes with it, but they are doing it, right? Like they are moving in that direction and they are thinking about how to improve the customer experience in a good way, and they are adopting kind of new technology to get there. It's just that it's not an easy path, I guess, but we definitely see it happening in a good way. This was really a great discussion. Anything you would want to add or explain from some of your experience or some of the projects you've done with some of the banks you've worked with, and like?
Yes, that's a good reason why banks are never kind of the latest innovations or the latest trend. It's because when they develop an app or web desktop, it needs to work for almost all their customers. They say they need to develop something that is compatible with almost any smartphones in the world and any browser's version, any OS also available. So that's why sometimes say, oh no, but they should do this, or why they don't use this innovation here and there. It's if it's only to benefit 1 or 2% of their customers, it's not going to be great for them. Also, something that is quite unique in banking is the way they finance their project. On the commitment of the investment. You often hear multi-billion-dollar project over several years, extra. The problem is that it rarely goes to the end of the project. At the end of the first year is all celebration. We have launched a great project and we are going to invest X billion, blah blah blah. And the second year, then you start to have all these IT companies, advisory firms, extra coming in and trying to sell and design what is the bank of the future. And then you start to say, yeah, but maybe we overpromised here. Maybe we can't do this part of the project before we do that first, and extra. And, in year 3, you start, okay, we are going to descope. Okay, we're going to descope. And year 4, you are going to say, okay, it's better to launch a new project rather than trying to launch this one. And this is a drama in banking, is when these budgets are so big that sometimes you can't get something out after many years. So, that's why agility is key in, continuous release, release small, but continuously show improvement, show the value. And it's coming. I mean, they are coming in. I have very good friends in all the banks who more and more deliver this way. thankfully. Never be impressed by a big announcement about the big investment in the bank.
Right. Yeah, the continuous improvement, right? Like I guess they've learned from more of the tech sector and the Silicon Valley approach on like launch and improve, right? Like ship it and but I guess for bank, like you mentioned, there's a lot of like security consideration, and they cannot just like launch something half baked and just hope for the best, right? Like it needs to be it needs to be well planned, and so through there's way more security consideration for bank than for other companies.
Data privacy, GDPR, etc. The list is endless. And well, it is good for us as consumers that this is heavily regulated, but the consequence is maybe the boat doesn't, turn as fast as we would like.
Right. Yeah. So I guess one final word maybe on like if I'm like a product owner or like a digital person within a bank and I want to get started in like getting better in customer experience and improving customer experience, like where do I start? Is it start with change management of the people internally, or do I start with technology in a small project? Or
so I'm not going to be very popular here, but never listen to your boss. When you work in retail banking, the person that knows the less about the customer is your boss. You want to know why, because they work on assumptions or data or what they lived, and usually it becomes irrelevant over time. You want to know what's going on with your customer, go to the data, go to the analytics, spend time with your analytics team to explain. They will explain to you what journeys do they track and what they've noticed. These are the people we know. And when I'm telling you, when I say that, I say go to the first-hand data. They say don't go after someone has produced a report or whatever, because I can't go into some details, but I've seen somebody a report manipulated just to serve the purpose to support a project that was going to be launched. So you want to truly understand what is going on with your customer. Go to your analytics team, ask them to explain the journeys, and you will get a real view. And often it will be a different view from your boss. And after you have this gap, and it's not easy conversation, but this is after while you educate your boss. It's very important to educate your boss after what the customer really wants, not what they think they want.
Yeah, exactly. What the customers really want. And I guess like the banks are doing that journey of trying to be where the customers are and be able to offer this experience that the customers think should be easy, right? Like, well, like there's so many complexity with it, but it's going in the right direction. Well, thank you so much for like your insights today. I think this was really valuable discussion. So thanks for joining us today.
My pleasure, Gwen. Thank you very much for having me.
That's it for this episode of CX Education. Thanks for joining us. This show is brought to you by Cinch, the technology company that helps you create mobile experiences your customers love. Did you enjoy the episode? Then make sure to subscribe to CX Education wherever you listen to your favorite podcasts, or visit cinch.com/podcast to get instant access to all the latest episodes.